Hello, Warriors, TGIF. Alexander, how you doing? Everyone else, hope you had a good week. Getting some decent action in the dollar right now. I'm fine, thanks, Alexander. Paul, how are you? Okay, so I've been talking about yields breaking down, and definitely we had it in a big way yesterday. So unless we get back above 148.5, we're headed lower. I think 130 is very viable. Yeah, euro's down, Alexander. So it's not hurting the dollar, which intuitively you would think lower yields would hurt the dollar. So what made hay out of lower yields? Silver, still way outperforming gold, right? Decent week, up week. And when's the last time you saw silver up 4 and gold down 10? And that'll show you how important it is to get directionality right on the gold silver ratio. Okay, so we kept trying to break out over this 68.5, and it's trying to roll over again. So I still think that it favors silver over gold. And that's what I thought earlier in the week. And that's what turned out to be correct. Hooray, we finally got a new contract high, new all-time high in S&Ps. And it paid not to have FOMO. And I'm still not ready to short it. I know Norm Winsky is looking for potentially a turn today, but I still need new highs in the NASDAQ. We're not that far away from completing. I still think there could be another 300 points or so to the upside in NASDAQ. And now that we're here and it's only the 11th, the solstice is looking like a pretty good time frame into the end of the month for this to complete. Well, I'm hoping that we don't take out the 68 level up here on this time frame. Okay. I don't see a way that the weekly is going to confirm, but you look at the weekly and the form is definitely there for a potential 3 drive. Okay, so I think we're, within a couple of weeks, and we'll see. And if I'm right about this, we should see a contraction in a lot of risk-on markets. So we'll see. And there still could be some more jet fuel left, unless the dollar really is turning down here. And it's acting like it wants to.
Well, we should take a look at the dollar.
There it is. You ask and you shall receive.
There we go.
So there it is. Let's see, on a weekly basis, it's an up week. It's actually a 2-week reversal if it sticks. So I know I'm with the majority. I think everyone thinks, most people think that we're going to take out the Jan low of 89.20. But what's impressive about the stock indexes is they had a pretty good week, right? Even though the dollar had a good week. Okay. Anyway, oil, and I think Blake talked about it earlier in the week. Check this out. This happened right here. S&Ps were selling off, but we've made a new high. We almost got to 71, and you have non-confirmations on the 4-hour. That sure looks like a nice little pin bar. And you have it on the 2. See if you even have it on the 15. Yeah, a little bit over 70. But, this was something. And, I wouldn't be long crude oil up here. So that's about it. The last thing I want to say is that even though Aussie is down today, it's still outperforming the euro, right? So I think next week is going to be a bye week in Aussie. I think there's a shot for between 50% and 61.8 back to try it. Here's a quick look at Swiss. Okay, so looks not as good to the upside as Euro does to the downside. And here's my target. Talked about this speed line here. Seems like it's forming some type of wedge here. Looks like it's going to come in around 2050. And we have some moving averages coming in next week. The 50 days coming in right here. Let me move you guys. I hope this helps, Marco. The moving average is going to come in. The green one looks like 2090, so just a little bit under here. But you know, either this is going to be
what moving average is that, Dale?
50 and 200. You know what?
Okay, all right. So that's the 50 and 200. Got it.
Yeah.
Those are the only ones I really keep on my screen at all times as well. Just
yeah. And the only reason I do it is because everyone else does, so I know what everyone's looking at.
That's the key. Is the moving averages to me don't tell me a whole lot, but if everybody else is looking at them for possible support or resistance levels, then you got to be respectful of them. So that's why I'll keep them on my screen. A lot of times I like to put on like a 21 EMA because I know, there's a lot of market participants that'll keep a 21 EMA on there on the daily chart just to kind of keep them in a swing trade mode, if you're above or below it, or, so there's a few things that I'll use from time to time, but I always tell people that moving averages are really, it's more of a, it's just kind of a guideline and try not to.
Do you believe in these death crosses and golden crosses then?
I don't really, but I respect them. If we see like there's here, let me pull up.
By the way, before you do look at Bitcoin, it did fight its way. It did fight its way back. I know it doesn't close on a Friday like everything else, but
as far as Bitcoin goes, as long as Bitcoin's below this 200-day moving average, which comes 42. In here 42, this is pretty key. And let me also take a step back since we're talking about this. I still believe at this moment the crypto space is very respectful of technical levels, more so than everybody else, than most other markets. So And this is another point of view here. Whoops, I didn't want to do that. This is the big breakdown point. It was at 42,000, right? So when you have like a 200-day moving average that also coincides with that, previous support, which will be now current resistance, when it all lines up at the same spot, that just reinforces that level of resistance for me. So. And if you've heard my analysis every day, if you're a ForexAnalytix subscriber, you listen to the Morning Edge, which is after this webinar, where we go through every of the major indexes and the currency pairs. I think I've said every day for like the last 2 weeks, hey, as long as we're below the 200-day moving average, I'm bearish Bitcoin. There's a scope for it to bounce up to here, but because I know that 200-day moving average comes in right at the same area, and it's also around the 38% retracement of this whole move down.
Speaking of death crosses, looks like it could do it in a few weeks.
And the reason why I wanted to pull up this chart is because this will put in a death cross soon if we continue to consolidate like this, and so. If you take what I just said a moment ago regarding, the death cross and how cryptocurrencies are respecting technicals more so than other markets, then you should say, well, if that's the case, then a death cross in the Bitcoin market may reinforce a view of a new trend low. And I still believe that we're developing like a wedge here, and you'll notice it's holding this wedge resistance. That doesn't mean it's going to continue to hold. But right now, your risk versus reward is pretty clear. You know, if the current level's right here, you want to be bearish while we're below 38, 39 or 38.5 and target back down here at 31 for now. And if for some reason we break up here, then, you know, you look for a sell closer to the 200-day moving average. You know, that's the way I'm viewing it at this moment in time. But it's pretty clear as far as Bitcoin goes. And I was talking to last night. I was talking to Chris Weston of Pepperstone Securities, and by the way, the euro yen's making a new trend low here. So just, you know, heads up. Here, I'll pull up that chart. It's come out of an ascending wedge, and it's making a new trend low. You guys don't get to see this chart all the time. If you know, ForexAnalytix subscribers see this chart all the time, but you guys may not have seen my point of view from this. We should see 132.50 to 132.50 here shortly. Anyway, the point I was trying to make regarding talking to Chris Weston is we were just talking about cryptos and talking about the crypto space. He's like, you know, I just see it as a trading vehicle, and I'm like, man, I see them all as, you know, trading really heavy. And, you know, we were talking about price action, and I was explaining to him that, you know, when price doesn't recover, when you get a like in Bitcoin, you had a 40% move from the highs, right?
Yeah.
You have a 40% move off the highs, roughly. Let's see here. Let me make sure I got the number correct. You get a 40% move off the highs, and that's 40 some odd percent, and then you don't get any recovery. That's not a good sign for bulls. That means that, you know, people are not finding value at this level. It's just consolidating losses. And so those of you guys that know me really well, I'll tell you this: big red bars are usually followed by what? More big red bars, typically. So when you have like this right here is a evening star formation on a monthly basis, that should produce more downside. Should, not saying it, you know, guaranteed. It's just, it should.
Wow.
So, you know, those are things that you have to keep in mind. And one of the other things you got to keep in mind is what the dollar is doing. So let's talk a little bit about the dollar, because I did tweet about it. This is really critical support. And if you guys, you know the FOMC is next week, and what happens with the dollar going, you know, after Wednesday is going to be really key. But between now and then, you know, I've been asked this whole week, like, hey, Blake, how do you feel about the dollar? And my point of view has been, you know, while we're down here above this channel support, I don't, and really above this really key level of support. This is long-term support, guys. I mean, this isn't, let's go over to a weekly chart.
Yeah.
This is, you know, going back to 2009. So if you think that this is just by happen chance, I have these like little red support lines, the support zone drawn down here. No, that goes all the way back to 2009. So you have to realize that we're on very critical support as an index, like of the last 12 years. So if you guys are aggressively short down here in dollars, you have to be really careful, especially with such a key event. And why is next week key? Because we are getting very close to a potentially a change in monetary policy. If you guys want to know what moves the currency market is, the baseline behind any movement is a change in monetary policy. Period. End of story. You can, you know, have your, you know, near-term ideas of why the dollar or the euro or the sterling is moving because of, you know, inflationary data or, you know, or jobs or, you know, whatever. But really the thing, the underlying, the belly of the move is all driven by what interest rate expectations are and interest rate expectation movements might be and what they are doing. So, you know, with the Fed quite possibly going to shift gears into tapering after seeing inflation at how many year highs did inflation hit yesterday? You know, you got to be a little respectful of that. You got to be respectful of what the Fed may say next week. So,
well, I saw your interview with Mark Faber. Great job, by the way. And he's not respectful of the Fed.
oh no, no.
Didn't he say they're a bunch of idiots or something like that?
Oh man, he's funny. Huh? The guy goes
Character.
off. He's like you throw the Fed and a bunch of educated morons like that into the jungle and they'll be eaten alive. I'm just like, whoa. Yeah. But you know, hey, I mean,
well, welcome to live interviews.
Right. I mean, hey,
you never know.
Yeah. I'm like,
it was a good one. Like,
you know, he's funny.
Everyone check it out on Traders Summit.
Very good. If you haven't checked that. And by the way, speaking of Traders Summit, well, we haven't posted it yet, but let me hold on, guys. Here's the ForexAnalytix chat room really quick if you guys haven't seen it. Let me grab the video link for you. If you have not seen this video yet, where the hell is it? I know I posted it here somewhere this morning. Oh, here it is. Okay. I'm gonna give this. This is from this morning. Oh, shut it. Stop it. Okay. I'm gonna go ahead and put this video in our link. This is, or in our chat. This is the top 5 worst trader trades. This is the video I was telling you guys about. Please watch it.
So it's basically a description of Steve, isn't it?
It is Steve. But
every man.
That's actually I just have to say it's everybody. If you for 1 minute think that I have not been guilty to all of this at some point in my career, at multiple times in my career, you're 100% wrong. Look, at 25 years of trading, guys, I've had my ups, I've had my downs, and I'm going to continue to have ups and downs like everybody when we trade. And we are all human beings. You cannot escape. You cannot escape having bad times in the market. You'll never escape it. I can guarantee you. I know the best in the business.
And I watch downs.
I know them. And if you think that they don't have bad days and bad months and fall into these traps, you're wrong. But what makes the difference is having awareness. Oh, that was to I put it in the chat box. It didn't go to everybody. Here, now it's going to everybody. There it goes. I just put the link in the chat. The key is having awareness again. Okay, that is the key. Knowing, oh shoot, I'm falling into that. Oh my God, I'm super emotional right now, and catching it early. You know, it's like just having that type of awareness will be critical in your success in the future. So watch that video, guys, and bookmark it. Stelios, what your comments yesterday to me were like, man, this is a great video, and I think every trader should bookmark it. Because you're gonna watch it at some point.
Watch it over and over again, and we've all made these mistakes. I've made them.
We all have. And if you're out there thinking, oh no, that never happens to me, that is you are just lying to yourself, straight up. So anyway, I just hope you guys enjoy that video. It's comes from the heart and the pocketbook. I say pocketbook because I've paid for those.
Yeah. So if we could help traders avoid that landmine, I don't know. I think sometimes you just have to live it. But I have talked to a few people that have avoided that mistake. Very rare. Never blew out an account. May have had losses, but not the kind of loss where Go ahead.
I've actually blown out account one time, and I'll tell you the only time I've actually, and I'm pretty proud of. I can almost wear this as a badge of honor. The only time I actually blew out an account was in 2001. We, as Americans, as in the United States, we could start trading the currency market, and the guys at the Wise Trade Group were like, Blake, how would you like to lead up the education part of the of currencies? I'm like, I've never traded currencies before, but I'm sure I can figure it out. It's just, I can read a chart. So it's like, and they're like, oh yeah, you're going to love the market. It's a 24-hour market and you get all this leverage. I didn't understand I didn't understand how leverage worked. And so I went out and I'm like, okay, well, this market sounds exciting, because I knew what drove the currency market, but I was still pretty new, and believe it or not, at that point in time, I started reading. Ashraf just started his in the industry, and I started reading, Ashraf stuff, and I'm like, oh, he's one of the first currency analysts that I was like, huh, okay, this is like back in 2001. And so I'm like, oh, this is interesting. I'm like, so I opened a FXCM account at the time. I threw like $3,000 or $4,000, $5,000, something like that in the account. And I was like, ooh, overnight. I was like, oh, the dollar's gonna rally or sell off or whatever it was. And I took a bunch of positions, and I'm like, okay. And then overnight I got up the next day and I'm like, oh, based on, positions I took, I should be up like, I should literally be up like, $5,000 or something. And, and then I got up and I was actually like up $1,000 my account had slumped to like $1,000 and I got pulled out of every position and I got stopped out of everything and I didn't understand leverage. So, that was my first time of ever getting like stopped out of everything. But anyway, all right. That's a product.
Because you didn't have Dale sing to you useless leverage every day.
Yeah, I had no idea what I was doing.
That song hadn't been written yet.
So anyway, long story short, you guys should watch that video. I hope you guys, really enjoy it and it resonates with you and sticks with you, and you can bookmark it and go back and watch it from time to time because I think you'll need it, because we all do. And that's it. So Steve Stelios, good morning, guys. How are you?
Good morning.
Good morning.
I'm wet.
It's raining here.
It's, oh, wow. You can't imagine what kind of a summer rain we had. And Murphy's
End
Law.
Of days?
Murphy's Law, the worst part was exactly when I had to pick up Jason from his school. So it was so hard raining that despite both of us having an umbrella, we both ended up completely wet.
Oh, yeah,
cool.
That's it. Well, we would take some of that rain over here, but not discussing the weather. Let's discuss the market. So
how about the shortage of strippers? Huh?
Yeah.
Oh yeah, we can't talk about that.
So we have the dollar recovering off of channel support ahead of the FOMC. You can see the dollar actually stretching along against everything. One of the currencies that I'm really keeping an eye on is the euro, because the euro is actually breaking through channel support here and triangle support. So we're now below the breakdown point, which is 121.40. This should actually put the euro dollar, believe it or not, back down towards the 120 level. Maybe the 161% extension will
like that
reach for here. Yeah, I mean, I was talking to Simon in our chat room, and Simon was like, pre FOMC, how about if we go mid range? What does that mean to you? And I'm like, well, mid range to me would mean if the dollar actually bounced, mid range would be, this is our range. Oh, I did not mean to do that. Hold on. There we go. If this is our range right here of where the dollar's at or the euro's at, for example, we are basically getting to mid range. My thoughts right now would be like this. over the next couple of days.
Yeah.
We see the dollar where the euro fall, and then we recover, and then we will be at probably around 121 pre-FOMC next week. That's going to be mid-range of this range. What do you guys think? Before the Fed, do you think I mean, that was some pretty high inflationary data. Is it transitory, Steve Stelios? Is it transitory? And do we see a little bit of a dollar recovery ahead of the FOMC? What do you guys say?
Well, the Fed and the ECB, they both seem to think that inflation is transitory. We've said this before. I don't think it will be. Or let me put it this way: we get let's say 10% rise. I'm just putting numbers here. 10% rise. It goes back down, to 5%, whatever. We're still going quite a bit higher, or 2%, whatever. We're still going quite a bit higher in prices, and I think this is going to take a while to get back to, let's say, normal levels. You talked about the euro dollar, and I think it's the first time in a while that we're seeing a technical event like this break. So maybe for the next 50 pips or so, this might be an interesting event. But I still think we are just ranging ahead of the Fed, and in general, unfortunately, my view hasn't changed on anything. I am still looking at yields. That's what I'm concentrating on. Obviously, the euro dollar can go 50 pips either way or 100 pips either way, but the big picture, I see nothing changed. And for scalpers, yes, there might be an opportunity here, but for me.
And speaking of yields, since you're talking about yields, I just pulled up the 10-year. This is the 10-year yield chart, and I had this drawn out just from
that's Steve's line. You took Steve's line.
Yeah, I probably
stole
did.
my line.
Steve, you have a patent on it, don't you?
I'm going to sue you.
We were probably talking about this at some point this last week, and it's not. I don't look at yields all the time. I'm usually looking at the 10-year, where we're at as far as the actual, 10-year bond.
Price, yeah.
But we are at channel support on yields, so.
Yes. And look at Bund. Look at the Bund as well. I mean, I never say, "Oh, well done me," but man, I think that exit that I did was pretty.
It was pretty spot on. I've been bullish on Bunds for the last couple of days because of these this technical event that we've had just the last couple of days, especially this breakout through 171. If you read the analysis on Bunds, in ForexAnalytix, we've been bullish on basic technical analysis, and we've been targeting the resistance that we're going to. So yeah, I mean, Bunds are right where we should be, and the interesting thing is still is they're rejecting where they should, right?
Yeah.
That's
make no mistake, I'm still looking to short them, but and treasuries too as well. But I just think we're gonna get a little rebound now, which doesn't make sense because inflation is going higher. But this is what we're getting, so you have to respect price action.
All right, very good. So Steve, what are your thoughts here? Do you have an interview, Dale?
No, not today, Blake.
Oh, wait, you know what? Then let me do this. I'm gonna give you, since we don't have an interview today, I want to give Steve. Yeah, I want to give Steve a little bit of time to talk about like maybe some of. I've been meaning to actually interview both Stelios and Steve over the last couple of weeks, and the reason why I want to interview these guys for you all is Stelios, we want to talk about how he's started balding over the last few years and how that's really affected his I'm joking. Stelios, I'm totally he's like about ready to throw the computer at me right now. But no, I wanted to talk to Stelios about his book and some of the traders he's come across over the last several years, and how the way that they've traded has impacted his thought process over the years, that type of thing. And I've been wanting to talk to Steve because Steve has an overall view of how he feels about the financial system in general, and wanted to get his views on video to make sure that you guys had them. So I really want you guys to hear what, Steve and Stelios have to say, soon. And so I'm not gonna take away from that too much, but Steve, I think it'd be great if people heard some of the views that you give them during the the morning edge that we do in about 45 minutes for the clients. I mean, most people don't get a chance to see all of your different views on these currencies. So why don't you take a little bit of time and do that for some of the folks here?
Okay, sure.
Okay, and before you do that, I have to also mention, guys, if you like these webinars, they are free. Make sure you visit Pepperstone Securities. They're one of the largest FX brokers globally, but you have to be out of the US or Canada to take advantage of trying to get ForexAnalytix for free for the next few months. But you also have to open an account here, and then visit Forest Park FX. They'll help you get cashback rebates, especially if you're in the US or Canada. And if you're not getting cashback rebates, then you should definitely reach out to them. That you can chat through them right here. Those are our webinar sponsors, guys. Make sure you visit them because it really helps us. And if you're watching us on YouTube currently, give us a thumbs up. And comment in the comment section. I try to go back and get to those throughout the course of the day. But yeah, if you at least give us a thumbs up and subscribe to our channel, you don't miss any of our great videos like the 5 worst trader traits. You won't miss any of those videos as we publish them if you're subscribed to the YouTube channel. So Steve, I'm going to pass it over to you. Dale, I'm going to pass it over to you. And guys, I'm going to wish you all a great weekend. And Stelios, I was joking about the whole, thing. But
you better be careful. He's a vigilante.
I am
Greek bond vigilante.
I'm not a bond vigilante. I'm a bold vigilante. There you go.
Oh, all right. What do you do? Go around shaving people's heads.
Yeah, right. Yeah, I want to thank you all for having, for being with us this week. I know this was one of those weeks where like, look, I was waiting for the breakout yesterday, and now we're getting the breakout today. I mean, of course, it's like a day late, but hey, at least we're getting it. But thanks for hanging out with us this week. I know it's especially, it's been low volatility, but, hey, that's probably going to change soon as central banks start to get out of this. Well, Steve will say they can't exit. So
no,
that's perfect. Steve, this is passing it over to you. Thanks, everybody. Have a great one.
Have a good weekend, Blake.
Thanks, you too.
Hey, Dale.
Hey, buddy.
What's up?
Good to see your charts.
Long time no see, huh?
Yeah.
Okay, so Stel, do we have any upcoming data? I don't think so, right?
No, we had some UK data this morning. We have some Michigan numbers, but this is in like an hour and a half. So
we had bad manufacturing data from the UK, right?
Yeah, every data was actually bad, pretty much. But
yeah, industrial production, manufacturing data. Yeah,
trade balance was a bit better. Overall, it was a non-event. It was not, it's not going to move the needle. Let's put it this way.
For some reason, the market doesn't care about real data anymore.
Yeah.
Steve, Hannah was asking for a view on oil, and wondering if you could maybe start there.
Sure, absolutely. We are covering oil on a daily basis in the morning edge as well. Okay. We were looking for this breakout in this symmetrical triangle for quite some time because it was more or less obvious that this is some type of a bullish consolidation. And we've seen a decent amount of follow through. Earlier today, we actually hit exactly the 127% extension of the triangle's range, which can be a sufficient upside target in this case, right? I'm not saying that we're done, because I would still assume that there is a good chance we're going to hit more upside targets, specifically 72.5 is one confluence of resistances I have my eyes set on, and the other one is the 161.8% extension at 74.60. So I think it's very likely that we can reach those upside targets as well. But admittedly, I would start being somewhat cautious because we kept explaining that this triangle should get resolved to the upside as it did, but there is a very good chance that this last thrust out of this triangle can end up being terminal, in the sense that we'll need some kind of a deeper corrective pullback before we can look higher once again. So, I don't think I would be buying crude here, right? If you were following the morning edge, you would know that we considered buying the breakout from the triangle technical event buying opportunity. But as I said, now that we've hit the first significant upside target, I would start being more cautious. But in any case, the path of least resistance remains higher until proven otherwise, and as long as we're trading above like 66.5 roughly. So keep that in mind. Now, having to do with the dollar in general, I'm not viewing this as a triangle breakdown in the euro. I'm for the time being, I want to keep my formations aligned with the direction of the overall trend. So my first intuition is that this is another type of bull flag here. So I think there is more room to the downside, but still within the context of a corrective pullback, as the RSI is also resetting to normal levels and will give us the ability to push higher. And the exact opposite thing, because they're invertedly correlated at a very big extent, is happening to the DXY. I'm still viewing this rebound in the DXY as a corrective move. You can see that it's nicely channeled in a channel that's not even really steep. We've given the opportunity to the RSI to reset to neutral levels. You see it's currently trading a little bit above 50. So my assumption is that as long as we trade below like 91, the market conditions favor an eventual continuation lower to new lows towards like my first downside target would be 88.25. It's a very nice confluence of supports. I think we'll probably make it lower than that, but it's definitely one first target I have my eyes set on. So other than that, we've somebody asked the other day about the cable. I mentioned why we don't mention the cable so much, and it's obvious on this chart why. We spent now, what is it, at least 3 weeks consolidating in an extremely tight range. I think what the cable is doing is probably correcting in time instead of correcting in price. So this type of consolidation, in my opinion, is most likely bullish more than anything. So I think we should be seeing the next push higher sooner rather than later. I would be looking towards 144 as the next upside target. Until I see something different, I have no reason not to keep looking higher. Now, having to do with commodity currencies, Aussie, Kiwi, I think that both, as long as USD CAD, USD NOK, although USD CAD, USD NOK are a lot more straightforward, I'll show them afterwards, but having to do with with Aussie USD and Kiwi, I think they're both consolidating. This might be some kind of a more complex consolidation, especially in the case of Kiwi. I wouldn't be surprised if we have one more leg lower, but still within the context of a corrective move, right? Or we might just find support here and just move straight higher from where we currently are. Especially in the case of Aussie, I think it's apparent that we are in some kind of a symmetrical triangle, right? It's been now quite some time that we've been consolidating here. And, when you see this type of a consolidation after such a big move higher, right? Don't forget that like a little bit more than a year ago, we were trading at 55 cents and we're currently above 77 cents. We're talking about a huge appreciation in FX terms, right? And after this type of a move, we're seeing just a period that the pair is coiling. It's it's extremely likely that the next move is higher once again. I think we remain in a bullish environment, but the Fed just needs to take a breather before it can resume its uptrend, and that's what I think we're seeing here. I don't think we have a head and shoulders formation here, as I didn't think we had a bigger head and shoulders formation there, which is now even typically invalidated because symmetry has been completely lost, right? And as you see, we're now losing symmetry in the small head and shoulders formation as well. I never thought that it's a likely scenario. I always, want to point to the likeliest scenario being the one that's aligned with the trend. So, I'm sticking with the symmetrical triangle hypothesis here, which eventually would assume a break 78 and change, which would be a bullish breakout, and then we can start looking at upside targets. I think we'll easily make it above 80 cents. I think we might go a lot more than 80 cents eventually. Now, I said before that the Canadian and the Norwegian kroner are a lot more straightforward against the dollar, right? I'll show you why. So here's the USD CAD. A little symmetrical triangle in a big downtrend. As long as that's the case, keep looking lower. And here's USD NOK. We broke through that symmetrical triangle, and now we've formed another consolidation which uses the previous triangle's trend line support as resistance, right? So, to make things simple, as long as we trade below 80.40, 80.42, keep looking lower. The chances are in favor of seeing another breakdown. Now, precious metals. So here is the gold market, right? It's still early in this consolidation correction, but it's likely this is a symmetrical triangle. There is also the chance that this could end up being a bull flag, right? So these are the two likely interpretations here. But in any case, as long as we trade above the broken longer-term channel trend line resistance, there is absolutely no reason why you shouldn't remain bullish. And here is silver. Silver looks quite a lot like Aussie, right? Big symmetrical triangle, in my opinion, probably forming a bull flag within this triangle. I think we're also breaking out eventually here. Sooner rather than later, probably, if market participants were more cognizant of what's happening. Yesterday's inflation data should have been the catalyst of a big breakout, but it doesn't really matter because sooner rather than later they're going to get the memo. We still see this Pavlovian reaction, higher inflation data, getting a bid to the dollar and the sell-off in metals, because the ideology behind it is that, the Fed is going to react, the Fed is going to increase rates, and that's going to be dollar positive. The reality is quite the opposite. First of all, inflation is always negative for whichever currency, unless you believe that the central bank is going to react and react in advance, not being behind the curve, in which case, inflation is a very, very negative reality for any currency. So I think market participants will sooner rather than later realize that the Fed has absolutely no intention of being ahead of the curve, and it's going to stay far behind the curve, in which case we're going to see big breakouts both in gold, silver, and everything else that's been recently consolidating, like palladium, copper, platinum. Platinum weaker than the rest, but still. So that's That's my viewpoint here. Now, I'll be more than happy to take some questions. I mean, in essence, today we did it a month ago. Again, we moved like the morning edge section in this webinar. I mean, once in a while, it's not a bad thing. So let me go through some of your questions.
I really don't see any, Steve. I'm scrolling back, and we had the one about WTI from Hannah, and maybe since you covered the gold, maybe take a look at the miners.
GDX, GDXJ, SIL. Yeah, we had a look at them yesterday in the morning
they haven't
edge,
made new highs yet, but I think they will. Yeah.
But keep in mind that the GDX has broken out a long time ago, right?
Yeah.
Broken out, back tested,
yeah.
Moved higher. I was saying yesterday before we saw today's candlestick, actually when we were at the lows, that keep in mind, I said yesterday, this is another bullish consolidation more likely than not. We're seeing a very nice reaction so far. Yesterday we had a very nice reaction anyhow after the webinar, and I do think that the same fate is going to be followed by the GDXJ, which I said yesterday when we were at the lows that this is probably some kind of a pennant. We actually closed above it yesterday, so we might be breaking out here again. SIL, which is the silver miners, as with silver miners and silver junior miners have not broken out yet, but they're very close to doing so. Here is the SIL trading in this big channel. As you see, we're very, very close to the channel. I think it's a matter of, might even be a few days before we break higher. And here is SILJ, which is in a symmetrical triangle, exactly as silver is, which is trading very, very close to triangle trendline resistance. In my opinion, we should be breaking out soon here as well. So yeah, miners have had a very, very bullish reaction from the lows, and they needed some time to correct the prior gains. And I think we're getting very close to the point that the market is going to now be free to once again strongly move higher. So I think that GDX, GDXJ, SIL, SILJ are going to be very good holds if you're long, or buys if we're talking about the silver miners in case of a breakout, because as I said, GDX and GDXJ have already broken out. They have smaller formations they can break out from as we speak, but they've already broken out from the bigger formations. And I do think that there is a good chance that in the next leg higher, silver might try to overtake gold's performance, right? Don't forget that
that broke down.
Don't forget that we've had already a big deflating of the gold silver ratio, right? That was a lifetime opportunity selling over there. 130 ounces of silver for 1 ounce of gold. And look at this formation. As you see, Dale, at the same time, we are flirting with breaking down again in the gold silver formation, right?
Yep.
So
I mean, today's a perfect example. What do you have? Silver up 20 cents and gold down 10. I mean, you know.
Okay. Although I don't really pay attention to small moves like this, I mean,
okay.
But in any case, I do think that, looking at this formation, I do think that it looks clear to me, technically speaking, that silver is not done trying to, doing some catching up with gold.
I think it's going to that $30 level again.
I don't know if it's going to $30, but there are a lot of interesting downside targets.
I mean, silver is going to $30.
Oh, I think
pull up the weekly. Pull up the weekly on silver.
I think
silver is going. Two drives up there.
I think silver is going a lot higher than $30. I can tell you that much.
Yeah, that's going to be an important threshold. It would be a breakout. We just have to see if it can, maintain it.
I think silver is going to 35 to begin with.
Yeah.
Nice support resistance area and 61.8, right?
Yeah.
So I think we're headed there inevitably. But I also think that given a little bit of time, silver is going for a third time to 50, and the third time, in my opinion, is going to be the charm. Third time, in my opinion, we're not stopping there. We're going to slice through it and keep on going. So keep that in mind.
Okay.
Okay, let's see what else. Just curious, do you have any opinions on Tether, a crypto tied to the dollar? Ziggy, I'm trying to remember what was the. Oh yeah, the video I sent to. I suggest you have a look. Let me find the video. I linked to Stelios the other day. We were talking about Tether specifically. Tether is not what you think. Tether is not what you think it is to begin with, right?
Tetherball.
Yeah.
That's only tether I know, where the ball whips around the post. It's like a soccer ball.
Let me try to find the video. Where did I put it? It's a very, very interesting video. In my opinion, everybody should watch it. Okay, let me see. I'll find it. Give me a second.
Okay.
It was a video by George Gammon. I'm sure you know him. Unstable coin, I think it was called.
You mean the guy that I've interviewed, George?
Yes.
Yeah, okay.
Okay, so this video is called The Coming Collapse in Crypto, but despite the name of the video, trust me, the video is mostly focused on Tether, actually. So here it is. I suggest you watch it.
Thank you, Steve.
Because in essence, he explains how important role Tether plays in propping up mostly Bitcoin, and how Tether is not what you think it is, and not stable as you think it is, and it's not exactly what it's supposed to be. So yeah. So I suggest people watch this. It's interesting because he goes through, exactly what Tether claims to be legally, I mean, and shows you how, Tether is not what people tout it to be, which is like, for every single, dollar worth, there is a dollar somewhere in a bank. The reality is far away from that. Far away from that. So yeah, I suggest you watch this, and I agree with what he says. I mean, he has done his due diligence. I had read several articles prior to that, but I think this video does a very good job in summarizing, all the issues there. So go ahead and watch it if you're interested in the topic, of course.
Okay, Steve. Well, you got to get ready for the morning edge.
Yeah. Okay. Is there any?
So you could go stretch your legs and go out in the rain. Do a little dancing in the rain like Gene Kelly, you and Jason. And, great week, Steve. Thanks for all your analysis. I really it was great to see your charts again today. So what I'm saying, guys, is I think Steve's one of the most disciplined traders I've ever met. And if you're not a member, you're not catching this. I guess we spoiled everyone by, giving this daily for 4 years, but I certainly miss it. I'm busy during the morning edge now, but you're one of the best, bro.
Thank you, Dale.
So you
Kind of
guys
you.
need to join so you could hang out with the crew in morning edge. That's my prescription for you. And
Biotech. So, wait. I have some questions, and I don't want to.
oh, okay.
I don't want to. If they were in the question box, I was looking at the chat. I don't want to ruin it for our
Ignore
friend here
anyone.
because he asked. Yeah, and ignore him. He asked for
Oh,
some
the
time.
Nifty. Someone.
Yeah, the
and
Nifty and a biotech stock. I'll be more than, and USD INR. I'll be more than glad to cover it. So first of all, here's the Nifty. Unsurprisingly, broke to the upside. Why? Because we were in a symmetrical triangle, right? I mean, this is a typical formation. Now, 16,223 doable target. You see all the upside targets here, right?
yeah.
So, but be a little bit careful because we know we've broken out now. Keep in mind, this might be a terminal move before a deeper correction, but we probably have more upside to go, right? So that's what I have to say about the Nifty. So it still looks bullish, still more upside targets. Now, USD INR, here it is. So yeah, but this is not the one I have my analysis on. Let me find it. Here it is. Okay, good. So nice reaction. I drew that quite some time ago. Nice reaction from this channel's bottom. Almost made it at the bottom, to be honest. I mean, not exactly, but almost. So we remain within this larger consolidation. As long as we're holding above 72, I think you can even be long. Although I'm not, there are not a lot of currencies I would be long dollars against. But in the case of the USD INR, especially closer to 72, the risk reward looks appealing to be to the long side, right? And even an eventual break higher doesn't look technically unlikely at all. Actually, it looks more likely than not. So keep that in mind. And having to do with your other question, the biotech stock that is Sava. I'm guessing this is the one. Cassava Sciences. Okay. Yeah, one of these things that just pop and then they deflate, but then they reflate.
Biotech had a good week. It was one of the big performers this week.
Yeah, I think it looks bullish. It looks good. Now, would I be buying it here? I mean, after this strong move higher? No, but probably you can even attempt to buy it here, to be honest. It is a first area of support, right? So it is a first area of support. We might find support here. But in any case, if this doesn't hold, then some deeper pullback will probably do the job. I have to tell you that technically speaking, it's not like the ideal chart, right? I mean, we're looking at stocks every day in the morning edge. I think there are better opportunities. I mean, people have asked for other biotech stocks, etc., that look, better than
what
this
about
one.
The people, Steve, that got an allocation of that at the beginning of this year before it went public? Look at that free money. You own the paper, it goes public, and you go from $20, a 6-bagger. And you didn't have to be right. Now you have to grind it out and be right. All this free money that's happened on IPOs like this.
It's one of the symptoms of the monetary insanity we're seeing, right? Money falling from the sky,
Plus,
or it feels
not
like
what
it.
you know, it's who you know.
That as well, yes.
Yeah, that's a lot
that
of
as
it.
well.
Yeah.
There is a lot of liquidity searching for a home, right?
Yeah. Well, my door's open.
Yeah, that's the reality.
Come on in, liquidity. Yeah.
and we know that in periods of time that function like this, that have these type of characteristics, there is a huge misallocation of factors of production, mostly capital, what the Austrians call malinvestments, right?
Yeah.
So people should keep that in mind. Angela is also asking for JD.com Inc.
Yeah, that's a Chinese internet company.
Okay, let's see.
Hi, Liquidity. Yeah, sit down right there and I'll get you a drink. I'm going to get Liquidity drunk and take advantage of Liquidity.
Very, very big move
Yeah.
higher.
Yeah.
The end phase here was
nice throw over.
Yes, now throw over to a wedge while RSI was diverging for quite some time, right?
Yeah.
So we're definitely now in the phase that we need to correct the prior gains. Now, the question is, are we done? We might be. We might be. So there is a nice risk-reward opportunity to be long anywhere here against the lows, right? Sometimes when you want to time the end of a corrective move, you have to take a couple of shots until you actually get it right. So keep that in mind. But it's worth it because if you're looking to align yourself with the overall trend, then, once you get it right, you have a lot. The point is that you have a lot of more upside to capture, because if we assume that this is indeed the end of this corrective move, the implications are most likely than not for a new high. So if we assume that this was the low, the implications are that we should see levels above the previous high, which makes the risk reward amazing, right? So you might want to give it a shot near 70 and a half. Now there is always the possibility that there is a more complex correction and this is not the trend line resistance and it's something different. But this is what trading the markets means. You always need to take some risks, and that's why we use risk reward. But I have to tell you that there is an okay possibility that we found a low over there. Okay, so it's
okay. Can we wrap it with your VIX chart?
Yeah, absolutely. I think that the VIX, to make it very simple, is not giving us a signal that we should fade strength yet, right?
Yeah.
You can see it here.
So you think we could see 1175 again, huh?
Next downside target would be around 13 and a half. So let's take it one target at a time.
Okay.
But I have to tell you that the VIX is not telling me that we should be trying to fade strength at the moment.
Okay.
So the VIX has done nothing wrong yet. Yes, it's a slow grind lower. We know that.
So nothing right. Yeah.
Yeah. But on the other hand, it has done nothing wrong in making us believe that it doesn't have more downside to go.
Yeah, it's still that $19, $20 level important pivot.
Yeah, and also keep in mind that it's now been a very, very decent period of time that we've only had. Let me show you. Lower highs.
Yeah.
Right?
Right.
Look at this.
Yeah.
So, so far, so good, right? For the bulls.
Yeah.
Not for the VIX bulls. I mean, for the equity bulls, obviously, right?
Yeah. Thank you, buddy.
Okay. So, see you all in the morning edge. My part in today's morning edge is going to be shorter since, we covered most things. I'm going to just, take questions. So, our members, if you have any more questions, etc., go over.
I'm sorry, I was away from my keyboard. Can you say that over again? The whole last half an hour?
Yeah, absolutely. Give me a second.
Have a great weekend, everybody.
Okay, bye-bye.
You too, Blake, Steve, and everyone remember, whether it's the VIX or Bitcoin or currencies or silver bars, don't just count these material physical things. You know, count things that are worth more than money, and that's, you know, the relationships that you have with people. And they're not mind readers, so let them know how you feel. So don't just count those things, count your blessings. And we'll see everyone Monday. Have a great weekend, everyone.
A capitalist counter argument, Dale.
Yeah.
I will never forget that one of the first things that stuck in my mind from the high school economics book was a sentence talking about money and wealth that was so accurate. It actually said that, you know, money and wealth doesn't bring happiness, but it eradicates many of the reasons that make you unhappy.
Here's my jaded statement. What good is happiness? It can't buy you money.
Have a great weekend, everybody.
All right, buddy. All right. See you, everyone.
Bye-bye.
Bye.